Hey guys, thanks for clicking on this video. Today we are looking at Walgreens Boots Alliance, ticker symbol WBA, to see if this is a buy in 2022. Firstly, what we're going to do is we're going to talk about a little bit about Walgreens Boots Alliance as a company. Then we are going to be looking at the fundamentals of the stock to give my fair value based on discounted free cash flow and the Buffett-Graham intrinsic value. So what is Walgreens Boots Alliance? Well, they are an American holding company headquartered in Illinois, and it owns the retail pharmaceutical chains Walgreens and, of course, Boots. These are two of the largest pharmaceutical companies in the world. So let's get on to the fundamentals of the stock. Currently, it has a market cap of 46 billion. It is in the healthcare sector. It has a share price of $54.03, 52-week low of $43.62, and a 52-week high of 57.05. It has a very healthy dividend that we're going to be talking about more a little bit later, which is 3.52%. And the ex-dividend date is the 17th of February. So if you buy the stock before then, you will get that lovely dividend. So before we get into that, can you please give a like on the video and let's move on. So is the P ratio less than the market? Yes, it is. It has a very low P ratio of 7.32 compared to the market, which is around about 28.5. So that is a massive pass. Next is the revenue increasing. Yes, it is, but a little bit flat, 131.5 billion to 132.5. So that is an increase, but it is relatively flat. If we just quickly go to Yahoo Finance here, you can see that it was actually up last year, but it is down. So it has increased from 2018, but overall, as I said before, still pretty flat. Next, what we want to be doing is looking at the profit. Is the profit increasing? And as you can see here, the profit has gone from 5 billion to 2.5 billion. And once again, let's have a look at the Yahoo Finance here. You can see that it was 5 billion in 2018, 4 billion in 2019, was $500 million in 2020. So it has jumped up dramatically since then, which is a very good sign. It shows that they're going back to their previous numbers, but still down from 2018. So that is a fail. Next, are they rewarding shareholders by buying back their shares? Yes, they are. 991 million to 879. So that is a pass. And finally, is the free cash flow increasing? No, it is not. 6.9 billion to 4.1. So that is a fail. But once again, it's a very similar story to the profits and revenue in the previous years, but it is a fail as per these steps. So overall, what do we have? We have 3 passes and 2 failures, which were the profit and free cash flow. And what is their free cash flow ratio? Well, it is the market cap 46.8 billion divided by the free cash flow, which is 4.1, and that has a free cash flow ratio of about 11, which is a bit higher than the P ratio, but still low. You want this number for these kind of companies to be around 15 to 20, so it's looking pretty fairly valued or undervalued at the minute. Then one of the biggest things we're going to be talking about here is the dividend. As said before, it is a 3.52% dividend, so that means they pay 1.6 billion overall for this dividend, and it is safe because they have 4.1 billion in free cash flow. So you can see here, the annual dividend is $1.91. It has a 3-year dividend growth of 12.5%. Payout ratio, as I said before, is very safe. And one of the good things about this is it has a dividend increase track record of 46 years, which actually makes this one of the dividend aristocrats, which is a company in the S&P 500 that has paid and increased its dividend for at least 25 consecutive years. You can see there's a lot of big names in here: Coca-Cola, 3M, Johnson & Johnson, Procter & Gamble, Target, and if we go to about 45, and now it's gone to 46, so they've done it again, there is Walgreens Boots Alliance. So now let's have a look at the discounted free cash flow and Buffett-Graham intrinsic value. We have calculated the future free cash flows here. You can see it's pretty steady growth, a bit on the low side, but let's have a look and see what this model is saying. So with an actual stock price of $54 a share, the calculated stock price of Walgreens would be around about $100 a share, which means it's at a massive discount, around 85%. And this is with pretty flat discounted free cash flow for the future. Next, we want to look at the Buffett-Graham intrinsic value, which takes earnings per share, expected growth rate, and their bond yield into account. And you can see here, this gives a fair value of $109.91, which is a 102% discount, and a ground price, which is, if you see it at this price, is a buy and hold. And that is currently $82.44. So both of these models are saying the stock is undervalued, and very interestingly enough, they are very same, saying it is about $100 a share. So both these models are saying it's a buy, and they are also saying that it is in line with each other, which is also very good to see. If we just quickly have a look at what the analysts are saying, you can see that they're saying that it's currently to hold, 1 buying, 6 holding, 1 selling, 55 average, on the high side 70, and on the low side $49 a share. So they're saying the stock will be flat on the average, but at the high side could get to $70. And I think that is closer to what we're saying. And obviously you've got to bear in mind that they are paying that massive 3.5% dividend. Now let's have a look at some of the technicals here. So the first thing we're going to look at is moving averages. So I've got Walgreens over a year. We have a 50-day here in green, a 200-day in red, and a 100-day in yellow. So what we're looking for is more recent bullish signs. And as you can see here, well, pardon me, is that the price has crossed all 3 of the major moving averages, which indicates a strong buy signal. Also, what we're looking at here is the 50-day is crossed the 100-day and is about to cross the 200-day moving averages. So those are pretty bullish signals in terms of moving averages. If we look in the past, you can see that the price did drop below the 200-day moving average, dropped below it a couple of times, and then that would have been a bit of a buy signal there. If we kind of see that when the last time the price broke across all 3 major moving averages, it was around about here when it was $40 a share and shot up till about 54. So this stock has been on quite up and down swings more recently over the last, well, since the pandemic. Really, once again, it's been lows of around $34 a share. Recent support has been around about 44, but you can see here we do have a bit of resistance over the last year at this $54 a share, but the price being across those major moving averages is in a massive bullish sign. Next, we want to have a look at the MACD. This is the moving average convergence divergence, and what we're looking for here is the histogram to be green. So it's currently green, which is a bullish sign, and also we want to see that the MACD and signal lines have crossed, which they did, which is also referenced in the green. But you can see here that they're also above 0, which is another positive sign. Now, one negative thing here is you can see it's actually slowing. These lines are about to cross again, and it would be on the negative swing. So I would say probably wait if you prefer MACD. But once again, if we look here, that would have been your buy signal on this day, $46 a share, and you would have held all the way up. MACD seems to be swinging quite a lot, but this stock has been trading the MACD quite well. There was your massive sell signal, there was a buy signal, and you would have held up from what, $46 to 51. Another sell signal here, and you would have bought right at the bottom. So MACD has been pretty good at the stock recently. And finally, what we want to look at is the RSI, which is the Relative Strength Index, and this tells you whether the stock is in overbought or oversold regions. And as you can see here on the daily chart, you can see the stock is in overbought regions, which is quite a negative sign. If we look over the course of history, the last time it was in overbought regions was here, and the stock stayed pretty flat for a while before dropping off. Once again, here the stock was in overbought regions, stayed flat for a while, and then dropped off, and then shot up again, overbought regions. So this is a bit negative. If this stock gets into oversold regions, which it did here when it was $43 a share, you can see by this line and this line, the stock normally has a massive rally. Also, if you look on the weekly charts, which is something else that you should look at with RSI, you can see it's not at the highest it's ever been, but this is going back to 2018. Here in 2018, it was at the very high side, dropped down. Here it was at quite a high side, dropped down. And here it was at quite a high side and dropped down. So stock is in overbought regions at the minute. Right, guys, thanks for watching the video. Please give a like if you enjoyed it, and I'll catch you guys next time.